The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. And, of course, it's great being back with my brother out here, man.
Great to have
Missed
you
back,
man.
Missed you.
Great to have you back.
I'll tell you, it's not like a couple weeks. A couple weeks off, folks, is a whole different ballgame.
You know, folks, the camera's not doing justice to his tan out here.
Yeah. I don't, you know what's wild is that I don't know if even when I got married to Angie, I don't think we took a couple weeks off.
Yeah.
But you see, it was set up perfect because July 4th was in the middle.
That's right.
You know what I mean? It absolutely was. You know?
I can sense you've already got that allocated for next year.
Well,
I don't know. July 4th probably doesn't fall on it probably falls on a Tuesday or Thursday.
It's a Thursday, which is good. Wednesday was better, no doubt. You know what I mean? No doubt about it. And I'll tell you, you know what's really wild? And I just said this to you. We were in the ocean, folks, but what was amazing, I was watching Tiger TV in the ocean, and it was so cool. And I had some friends, out with us. I says, look at this. Look what technology can actually do. It's crazy, man. I mean, it really is. It's so cool.
That's good. Now, where you were picking up, at that stage, you were picking up maybe wireless or satellite?
I had the wireless.
Wireless, yeah.
And I think the wireless is probably good. I'm not sure. We were probably only maybe 4 miles offshore.
Yeah.
But it was fine. It was fast. It was great. Like, this is just pretty amazing. Do you know what I mean?
And so Tiger TV is expanding today.
Tiger TV is expanding
which
today.
Is great. We're going 9 to 6.
9 to 6. Okay, so
we
appreciate you growling and prowling out there.
Congratulations.
Yeah.
Because I know you've been wanting to put this together for a long time.
Right. No, absolutely.
And that's so important to you.
Step by step.
Yeah.
No doubt. So today, we're going up to Newton with Basil and over to Tucson. And then Daryl Martin, folks, is starting a program today. That's from Dallas, Texas. It's a beautiful thing.
Yeah.
You know, so now we get the West is a good showing out here, man.
They do.
They do. I mean, we get Dallas, we get Santa Fe, we get Tucson, we get California.
Yeah. That's beautiful.
That's a beautiful thing.
Yeah.
Let's take a look at this market. We get the Dow right now down 55, Nasdaq off 10, S&P's off 6.5. We get gold up 7. Bonds are up 10, 150.06, and of course King Dollar wants higher price.
Yeah.
And that little baby. I mean, when you look,
you missed the dollar, the little bit of over a dollar move. When was it? A couple on? I think it was last
Thursday and Friday.
Yeah. Thursday was a big move.
It was a big move.
Now the market didn't move much, but the dollar had a huge move in it.
Yeah, it absolutely did. And you know what's interesting is that I like the way that the gold market is setting up right now. And this guy can do one other thing here. And what I'm talking about specifically, folks, is that when long-term bottoms come in.
Yeah.
And this one here has been a heck of a correction. What happens is that I'll do that in a second. Oh, 1 second, I can find that. What happens is that it continues to get tested.
Yes.
And that's exactly what has happened in this case. And I liked the fast price destruction last Friday because the volume died on the fast price destruction.
Okay,
and that's
when it pulled back, yeah.
So when I'm looking at this, it's a very large consolidation.
That's big time.
And what happens, folks, is that this is what's going to get wild out of this deal, is that the bottom is somewhere about maybe 1545, but the top is almost at 1700.
Right.
So this is going to be a currency deal. This is the stocks that are getting strong out here, the stocks that their currencies are getting weaker versus the dollar.
Okay, right.
And gold doesn't have to move higher for these companies to make money hand over fist. What has to happen is their currency's got to crush.
Yes.
Get a lot weaker.
Yeah. So when I take a look at the U.S. dollar index chart here,
right?
And this is the weekly chart that we've got out here.
Yes.
So the weekly chart, what it's doing, it's coming back and it's testing the highs from. It's trying to get above the August 27th, 2010 area. Now, interestingly enough, so far it's stopped just pennies right before that area.
And that's the most dangerous move when they stop right before it, because that's going to build cause to blow it away. That's my take, anyway.
Yeah. So with that being the case, that automatically sets up the run to 90.
Yeah. It does.
I mean, because there's really, swing point wise, there's nothing. I don't know what it looks like on the daily, but on the weekly, there's absolutely nothing in the way.
Yeah. My take at this point is that we're going to be building cars. We're going right into October here.
Yeah.
Because this baby is just building cars.
October 4th lows.
Well, I'm just saying the downtrend is in place in a big way here. Do you know what I mean?
Yeah.
Now, what could save it? Like we're at 1350 S&P, right? So the 1315, 1285, you're going to need some real juice in order to break that down.
Right.
We'll see what happens when we get down there.
Yeah. So back to gold. Just trying to correlate.
Yes.
So on gold here, where you're taking a look at, if the dollar index blows the 80, the area where it's at away right now, which is 83.64.
Right.
Okay, right in that area.
Right.
And starts moving up to 90. What do you think that's going to do to gold, though?
That's what I'm liking about this thing. That gold still has plenty of room down below it. We're at the 1588, so you get down another $60. I don't think it's going to blow it out, though.
Okay.
It doesn't look it.
Yeah.
Because how the volume contracted, okay, is really neat. It contracted the price point, so the benchmark out there is the June 1st, 307,000 contracts. First time we come down with 159, you come down again with 214. You come down last Friday at 162. I like that setup. It's just deviant enough.
Yeah.
Do you know what I mean? I mean, even before I left, it was a patience game, and now people are frustrated, and that's what it takes. What it takes is that type of frustration,
Yeah. So you're still looking at the 1535 area as the area where gold will hold, even if the dollar pushes up into that 90.
I am right now.
Yeah.
And before I wasn't. Before I was looking at 1450 or something. But I really like what's happened here.
Yeah.
I like what's happened with a few of the equities. A few of the equities have done the same thing. They're frustrated people. They've been going down for 8 months.
For sure.
People have thrown in the towel, and that's what it takes for longer term bottoms.
Yeah.
And when I say a longer term bottom, see, my take, when you can get these things right off the bottom in gold, so in the last 10 years, we've had, this would be the third huge correction like this. And this has been the largest.
Yes.
The largest for the longest periods of time.
Yes.
What happens is that for the next year, I'm not expecting highs, but what I am expecting is that if you get these stocks right, you get 30-35% out of them twice.
Yes.
And then maybe a year and a half from now, 2 years from now, then it blows higher.
Yeah.
But that just totally makes sense, because what that would be, well, it makes sense to me anyway. Because what that would be is that would be 3 years after the gold high had been in.
Yeah.
Right?
Yes.
Interest rates are low. The inflation's going to come. I mean, who's kidding who?
Just
you know what I mean?
you're just kind of...
Yeah, it's just a matter of, then all of a sudden it's 3 years later, and then all of a sudden gold at 2,200 is not a big deal.
That's right.
That's a normal occurrence, man.
Yeah.
So it's going to be wild watching it shake out.
Yeah. Oh, even over the weekend, I had somebody had one of our clients was asking about gold and some coins and things of that sort. And so on my longer take, I believe that the price projection I gave her was longer term. We're looking at 2,700.
Yeah, I like that.
It's really how things are really setting up here.
It is setting up.
So,
and particularly, so watch this. The key, folks, is this: is that when you have, I'm going to put a longer term gold chart up so you can see, and I'm going to bring it all the way back so you can see the consolidations. And I know, depending on how long you've been in the marketplace, it's wicked when you turn around and say, okay, particularly having the gold report telling people, hey, you're going to consolidate for a year or 2 years. It's like, what are you talking about? But that's what it does. So watch. Right now, folks, we're looking at Tiger TV, and if you're driving to work, I'm going to explain exactly what we're talking about. If I bring it back right to the beginning of the bull market of 2001, what you have is that, you had a sideways move, and it looks like it didn't move much, but it did because you're dealing with smaller numbers.
Right.
So the first big sideways move after a run, we had a run from $413 in 05 up to $732. Well, you know what? We stayed at $732 all the way down to $550 for over a year.
Yeah.
Okay, then what ends up happening? You make the next run, $642 up to $1,000.
Yeah.
Well, guess what happened? That didn't move for another year.
Yes.
Okay?
Yes.
So you were back down to $682. Then you had the extraordinary run.
Yeah.
You go from $600 up to $1,920. Well, when you make a run like that, if a bull market's going to stay in place, okay, you have to consolidate.
Yes.
You absolutely have to.
Yes.
And that's what we've done. And we're 12 months into it. And because that run was so big, well, so picture.
Yeah, that's right.
You go sideways like that another year and a half, but the equities have real movement in them now, and I think the equities, it's going to have to do with.
So you think part of it is they've got more because of this consolidation, stabilization aspect. What happens is people aren't as concerned that the lows in essence are in there and will hold, and that helps those equities.
Yeah, I think it really has to do with, there's two different things. It has to do with most people really don't get their head wrapped around the currency deal.
Yes.
And they're going to think that, gold's going to 5,000, and I think they're crazy. It's not even close.
Yeah.
What it has to do with is that, okay, we're always looking at things on a technical basis, but we know it's the buying and selling, and it's are they making money or not making money.
Right.
Well, gold can go down $200, and the dollar can go to par.
Yeah.
And if the dollar goes to par and gold stays at 1,300, let me tell you, you wouldn't believe how much money they're going to make.
Yeah.
The Canadians and the South Africans.
Yeah.
They're going to make so much money they can't see straight. They're going to make
strong dollar against their currency.
Yeah. Huge. They're going to. I mean, you're talking about 4 to 5 times more than they ever made when gold was at 1,900.
Yeah, because the revenues are going to be priced in U.S. dollars, and the expenses are going to be in their currency.
Right, and that's all we know. All it means, folks, is that what you have left at the end of the day after you pay your bills.
Yes,
that's what moves stocks. So it's going to be interesting. I like how this is laid out, because I was really worried, man. I was saying, this thing is a mess, right? I mean, right? Do you know what I mean?
For sure, absolutely.
And you never. What happens, folks, is that you really never know until you get enough, information. I feel like we really do have enough information at this point. Do you know what I mean?
So you think Paulson's right? He was just bad timing.
Yeah.
Is that kind of what it really boils down to there?
Yeah, and I would say that the GLD is not something that you want to be in. I don't, the GLD to me doesn't, No,
he was getting out of the GLD, though, moving into equities.
Yeah, the GLD's not bad, actually, though, because we were 154, and that can test 164, so that's not bad either. Yeah. You know what I mean? Yeah, no, I think he'll see, I think he's going to see higher price. Hey, check this out. You want to see something wild? So listen to this, folks. Real estate.
Yes.
Okay? Now, you know how we always talk about when I started the gold report, right? Who is the first company that only owned gold? Do you remember? Okay. Out of a mutual fund, okay?
Yeah.
Okay, so check this out, folks. There was only one company. It was Fidelity. Fidelity owned 14.2% of Gold Corp.
Okay.
Okay? There was not one other fund that was in anything.
Yes.
Okay? And, of course, we know what happened, right? They come in. So, inside the real estate deal, and I'm basically making this whole real estate paper right now, and it'll be ready about another week and a half,
yes.
Okay? I went through, so I got home Friday.
Yeah.
And, of course, I'm feeling great. So I did some work Friday. I worked all day Saturday. Having a blast, though. Do you know what I mean?
I love
you
that.
stay right
That's
there,
like
folks.
Being re-energized.
Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us. Great to be back with you, folks. Dow right now is down 71. Nasdaq's off 13. S&Ps are off 8.5. We're going to be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. So what we're talking about, folks, is that when I first started the Gold Report, the only fund that was in gold, period, 14.2% Fidelity owned, of Goldcorp. Now, you know that we always talk about, depending on how long you're listening, there's up in Boston, folks, okay, you get Fidelity, you get MFS, you get Wellington, and you get State Street, all within one block of each other, okay? And I picked this up years ago, like more than 15 years ago, particularly because a couple of these guys lived in my neighborhood, number one, okay, the fund managers. But more so than this, when you can track fund managers. I don't expect that they pick up the phone and talk.
Right.
But you can track them, okay? So these guys track each other.
Well, that's right. They track each other.
Just like we can track them, okay? Like in a big way. Well, bottom line is that I started doing this paper about real estate on Saturday, right?
Yeah.
And I says, okay, man. I says, where can I get the most factual information? Meaning, because what we've done here, folks, is that if you are interested in real estate, you're interested in single families, renting them, we have a fund. It's the Tiger Fund at TFNN. If you're an accredited investor, you can email us, Tigerfund at TFNN, for information. But so I was looking, saying, okay, I know what I feel like.
Yeah, but you just want to see what's really going on out there.
Because the reality...
Let's be objective.
Yeah, and the reality would be that, okay, if you're buying singles, you plan on renting them, you plan on selling them. I mean, I think this place down here is insane.
Yeah.
Okay, because I know what it takes to build them. It takes $175, $175, $200 a foot to build them. Well, I can buy them at $48 a foot.
Yeah.
Okay, so give me a break, right? So, but then what does happen is that you absolutely need someone else coming in to take you out later.
Yes.
Right, you need big money.
That's right.
You need big money to take you out. That's the bottom line. Well, bottom line, what should I show you? This was I was like, you got to be kidding me. So what I did is I start going through all the home builders. We know the home builders, they're off the bottom in a huge way, right?
Yes, absolutely.
So we just take Toll Brothers, right? And Toll Brothers, okay, so, and the reason I took Toll Brothers first is because what does happen with Toll Brothers is that they have huge amount of property in Florida. They develop single attached. They're in what basically the market I'm in right now.
Plus, just fundamentally, when they did the right things.
Yes.
When the market was moving down. Right. And then when there was bottom. I mean, because of all the land.
Right.
They just remanaged their balance sheet.
They did. So if they're at $29.96 right now, and this is a classic time in the trade. I mean, it's like you look at it and I say to myself, okay, so let's bring it all the way back. And where I'm going with all the way back, I have experience a long time back, going back to 1971.
Yes.
In the real estate business.
Yes.
But when I'm looking at this, I'm saying to myself, okay, what prices are we at, number one? Now, watch what you have, folks, with Toll Brothers. Now, by the way, after I did this, Toll Brothers is absolutely the equity, okay, that you want to keep your eye on. It is the strongest equity out there.
Yes.
Bar none, either.
Yes.
So I get a monthly up right now. So Toll Brothers, the highs was $58, okay? Now, what you have is that you're trading right now at a level where Toll Brothers was in 2004. Now, if you remember the market, folks, okay, what we had as a run-up, the 2004 was the first time that the market should have really crashed, the real estate market.
Yes.
And that's when the Fed just said, no, I'm going to throw even more money.
Keep it going.
Okay?
That's right.
So from that point on, that's where that bubble exploded. Okay. Now, what Toll Brothers has, though, is that you get volume at the high.
Yes.
Okay. Now that crashes like all the rest of them. But what happens is that first you get the test at the bottom, which is a mind blower. Toll Brothers had come down to 1549, 135 million. Well, guess what? We came down 13. It didn't close the month. It went above it with 89 million. Well, guess what? You came down again with 82 million. Wouldn't hold the 13. Took off. Then not only took off, but then in May, you have a high volume with conviction. You do. I mean, heavy duty,
and clearing a huge consolidation area.
Right.
So so it cleared the consolidation area.
Cleared.
And you just were going through a consolidation area on the gold chart.
No, totally.
Well, so here all of a sudden you got the conviction.
So next, what I do is this: I say, okay, let me see who the big buyers are, because it's all about buying and selling. That's all that matters. Okay. Where's the money? Well, guess what, folks, okay? When we take a look at the money, Fidelity, okay, came in heavily the last 8, 9, 10 months, okay? They own 14.9% of Toll Brothers now. Robert Toll himself owns 6.9%, but watch this. This is the key. Wellington has 5.59%, and State Street has 3.46%. It's like, you got to be kidding me, man. They're all over the place. Now, this is what Fidelity, Wellington, State Street are doing. They're not buying all of them. They're buying the ones, though, that they're the owners that are actually running them have a stake in the deal.
Yeah, and Bruce Toll's got 4 million shares as well, another couple percent. So,
amazing.
Yeah.
Steve Rhodes, Tom O'Brien. If you do want information, folks, in the Tiger Fund, you can email tigerfund@tfnn.com. We'll get right back to you.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insight subscribers close out multiple winning trades. Take action and sign up for your free trial today.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
They just bought 10 million shares.
Yeah.
Steve Rhodes, Tom O'Brien, appreciate you growling and prowling with us out here, folks. And we just went to another one. Now watch with Fidelity, State Street, Wellington Management, what they're doing. What they're doing, folks, is this. Inside the housing, they're not buying just housing in general. What they're buying is that they're buying these home builders. Like I got D.H. Horton up right now, okay? And they're buying the home builders that the management themselves, in this case, Donald Horton, D.H. Horton,
yes,
owns it. Okay, not owns it, but he's running it.
Right.
That's what they're buying. Right. If you go one by one by one.
Yeah.
So in this one here, the last filings, Fidelity owns 14.9. Lemons owns 15% of it. Horton owns 8% of it. Let's see. State Street came in and bought another 247,000. They own 4.1%. Wellington owns 3.2.
Yeah.
So you got.
Well, Wellington got their entire position during the first quarter.
Their first quarter.
So that's 10 million shares. So
right.
if you're wondering whether or not you've got folks that are willing to support a price,
that's right,
as it moves back,
right,
all you have to do is just go take a look at the between December and March and understand that range.
Right
there,
that's
folks,
right,
is where you've got a support level.
And look what they're into. Single-family housing.
Yeah.
Single-family housing, folks, is the name of the game. And the reason it's the name of the game is this. So picture this. There's a couple different things that I think are going on in a big way. And this is what it is. Do you know how many people just have pets alone?
Well, it's got to be huge because every time I drive through a shopping center, there's a pet store. That's all they're doing is selling pet stuff.
So watch. When you have a pet, what do you need, folks? You need space.
Yeah.
Okay? You have a demographic that's coming out of, college, just a younger demographic.
Yes.
Flat out.
Yes.
2 or 3, either women or guys get together.
Yeah.
Number one, and they want a place. Okay.
Right.
So what do you do?
Sure.
Do you get a place, and there's, you get condos, you can do all that. But you know what they also want? They're used to what? They're used to their houses. They're used to more space. They want a backyard.
Oh, absolutely.
This whole deal,
Yeah.
you're going to see a deal that is changing. I think it's changing very quickly, and it has to do with quality of life.
Yeah.
And it has to do with. The aspect that you could say, oh, you get pets in the place that can wreck this or wreck that. The bottom line is that the buying versus a renting right now, if you can figure out somebody to make more money, God bless you. But the bottom line is that for risk versus reward right now, that's the name of the game with a hard asset. So you get a hard asset.
Yeah.
You have an asset, and this always gets.
We also don't necessarily have the choppiness.
No.
Because you had the pullback. Okay, pullback crash, what have you.
Right. No.
So you're no longer dealing with the choppiness.
Right. And you're dealing with a limited supply, and you're dealing with, my take is that inflation's going to keep going. Maybe it's 2% this year, 2% next year. It's
not today's inflation. It's the inflation that's 5 to 10 years from now that becomes the.
Then everything just gets more expensive.
That's
what I mean?
Yeah.
And what ends up happening, of course, is that all that's happened with houses, you get a house at, let's say, $150. Well, you know what? If it goes up 10%, which you can go up off the bottom easy, well, it's $15,000.
Right.
Plus you get the rents. I mean, that's only in a year.
For sure.
So it's a different type of,
Well, what I was telling you was, so it's Stockton, California. So during
Stockton,
the break, yes. I was listening to a report yesterday afternoon. And I believe Stockton, California has been one of the places.
They got killed.
Right?
Yeah. We used to be on the air there,
Okay.
That's called the Triangle out there.
Okay.
When they were building that out, I was on the. This is going back probably.
No, Stockton, is that
8
northern?
or 9 years.
It's northern. Northern?
Yeah.
Okay.
It's northern, and it's also in.
Okay.
There's some kind of triangle that they had built 2 big roads out, and it was a big area, big.
Yeah, and so their report was just simply the mere fact that all of the homes that are, and apparently they've got the largest load potentially up there, where the most overbuilt was in Stockton.
Right.
That 98% of the homes are all being consumed.
Right.
By investors.
Right.
Because of the cash, because they've got the cash, the foreclosure becomes an easy deal. Just go in there and.
And I think the market's changing. What ends up happening is that if you go to Europe, folks, okay. So picture this: when I was a kid, right? I would basically, in South Boston, I was looking at those 3 families. Says, man, this is great. There's only so many. Particularly, what also happens here too is this, folks. It depends on where you are, whether it's built out or not. Like we're in Pinellas County, which is built out. You can't build anymore.
That's right.
That's a big deal because you're not worrying about a lanai coming or someone coming. There's no more land to build.
Yeah.
It's dense. What's really weird about Pinellas is that that's the most dense county, in all of Florida.
Oh, is it? Yeah.
All of Florida.
Okay. Because
you'd think it Miami would be.
Well, except in Miami, you're dealing with between the ocean and the expressway.
Right.
But at least the further up you get.
But no, absolutely.
Because then you're pushing into the Everglades, which basically is Wellington or something.
Right.
Which isn't that far off the expressway west.
No, it's not. It's not.
So it's compact.
It's compact. So when you're basically looking at it. In South Boston, I was looking, man, it's amazing that you can actually own something. You can get a couple rents. You can, in my case there, I can open a store in the bottom, which I've done, right?
Yes.
And then what ends up happening is that I remember the first time I was in Europe, and when I got to London, right?
Yeah.
This is when I was doing business with Wembley. I realized that, the king and queen, folks, they own everything under the land. There's only land leases. It's like, there's only land leases, man. You see these ads in the paper, folks. You get a picture. 30 years left, 27 years left, 40 years left, whatever that is, right?
Yeah.
And, of course, then, my correlation is, the kings and queens want to keep everyone in slavery. And, and bottom line is that that was one of the biggest plays ever, and they still own it.
Yes.
Then what I was looking at also is that if in London, what ends up happening, folks, is that you don't have the same opportunity as individuals as we do in the United States, so you can actually own it.
Okay,
so now, when I was in the Marines, I was in California. So then I went back to California. I'm looking there. Now, also in California, forever, the large apartment buildings have always been owned by big corporations, so they don't really have the same opportunity that we did in the Northeast.
Yes. Got it.
Bottom line, I think what you're going to see, and this is sad, but what you are going to see is going to be more institutions owning more property, and this is
that's really what the whole message of yesterday. It was an NPI story that I was listening to, and that was really their whole take was that there's a different transition going on in Stockton, California, and the ownership is going to be by these investor groups. It's not going to be by the individuals.
And why sell them if you're getting them right and you can't build them and they're cash flowing? And until there's a better cash flow with less risk, it's not going to happen, folks. What's going to happen is that they were saying, look, the mentality isn't that these guys are going in there necessarily for the majority. They're not short-term flippers. Right.
Okay. This is becoming an investment class.
Let me tell you something. Right now I'm out to about another 4 or 5 months at the county courthouse. I love the idea that there are flippers out there because you know what they're doing. Well, no, this is watch. They're making $2,000 or $3,000. I'll give you $2,000 or $3,000. I'll take it off your hands too, because the reality is that on 150 you're going to make 75 or something. It's like, and this is just and get cash flow in between it. So it's like insane. Anyway, it's a beautiful thing, man.
I love having you back.
I love being back, man. No doubt. So, Europe. Let's go look at Europe, man.
Well, you talk about, I was taking a look at some longer-term Euro charts here. So, the Euro, is totally getting smashed last week.
Right.
And the reality is that, they're not, the question is, how many times can you keep floating the ESFS and that whole thing? Well, they're gonna keep floating it.
Yes.
They're gonna continue to float that whole thing. And when you take a look at the longer-term Euro charts, it's going down to par.
Right.
The longer-term charts say like 99. They're just below par.
Oh, I know. I know.
They're just like,
which makes sense. That's only 22 ticks down. It's great. It's not the end of the world.
Oh.
I got to start, I'm figuring, I can bring Angie to...
That'd be pretty nice to be able to go over to Europe and
we gotta get.
Just gotta get the UK to join in. Get that.
I want to go right next to the Swiss border, but in Italy.
Yeah.
Because I saw those pictures up there. I forget.
Of course, by that time at par, we don't know who's actually going to be in and who's going to be out.
It won't matter. Italy's always good. Totally, man. No doubt. So let's take a look at here. What the heck is that? It's amazing. Apple's still hanging up there, isn't it? Yeah, look at that. Apple's still hanging up there. Apple's holding the NASDAQ up, that's for sure. So Apple wants to go test that 610. Well, it's at 610 right now.
Well, and we got earnings season now. Basically, officially kicks off today, right? To go with Alcoa.
Oh,
I love it, Alcoa.
Yeah, Alcoa. What a sick dog!
You got to have a dog to start with.
Oh my God!
You'd think to start earnings season they'd try to stick Apple up there.
I know.
Right?
Totally. Folks, you know what's amazing is that you really would think that Alcoa has always kicked off earnings season, and you think the rest of these companies would get together and say, "Hey, get rid of them, man."
Yeah.
Because picture,
But and why don't you explain to folks what the reason why Alcoa is not being pushed out of the Dow? At $8.66. Why are they still in there? Well, you still have I guess take a look at the ownership that you've got there. Right? You still have huge ownership by funds out there.
Well, more than likely, as all the money goes down the drain. Let's go take a look. So, if we take a look at that's American funds. So, Capital World Investment, folks, is American funds. They are the largest owner, 5.1%. Then you get State Street. Then you get Vanguard.
Because if they were to be removed from the Dow, these guys would have to sell a bunch of their holdings, right? Which would just which would just crush,
devastate it,
right?
Oh yeah, big time.
So is there that kind of thinking that is inside?
I suspect that there is probably that type of thing. But what they love to do is that if in fact this is the lowest one or weakest one, what that Dow committee does, and this is where the behavior mathematically is not correct, and you can almost say it's fraudulent.
Yeah.
It's not fraudulent because they tell you what the formula is, okay? But what people don't understand is, the Dow's always going up. Well, they take the weakest one out, and they find a great stock that's not in it and put it in it.
Right.
You know what I mean? Maybe they'll put a home builder in it.
No, the XLF has already done all that.
Yeah, right. And so what they do, folks, that's how and it's called an Ibbotson chart. That's how an Ibbotson chart really looks like it's always gone up since 1930.
Right.
The fact that it hasn't. And, Data General's bankrupt, Polaroid's bankrupt, Digital's bankrupt.
Yeah, the only thing that's in there is GE.
Yeah.
Right? So you only have one.
Right. Isn't that crazy, though? Now, what's going to be cool, folks, is to see what ends up happening, because if you were around the 2007, 2008 downdraft, right?
Yeah.
The big deal then, of course, Barclays, Diamond went, for the LIBOR scandal, right?
Right.
Folks, the whole world knew that LIBOR wasn't real.
Yeah.
That was a no-brainer.
Yeah.
That was an absolute no-brainer. Now, what you have is that they got Diamond out, but the regulators are just as bad, including our own Fed. They knew. Yeah. Everyone knew what was going on.
Yeah.
There was no way. And what they say, folks, is that the LIBOR at that point was saying, this is what we'll lend to each other bank overnight. They're all lying.
Yeah.
I mean, big time.
Yeah.
So we'll see. They're going to try to take down the British regulator in the next few days.
Yeah. Okay.
To see, where this comes. But you know what, folks? It's the whole world. It's not just, it isn't. It's just, and now all of a sudden, and if do you remember when after this was over, folks, I actually said that it's going to take 2 or 3 years after that, right?
Yes.
And then the sharks are going to start eating each other.
That's right. Yeah.
And that's
absolutely.
what's going on.
What's
going on, folks, now is that the sharks want to eat each other.
Yeah.
Okay, because they all feel peppy, they feel good. You know what I mean? They're saying, okay, because if I don't eat them, they're going to eat me.
Yeah. You're hanging out with some sharks.
I did. Well, thank God we didn't see any great whites. There was a couple of great whites up there, though.
Was there really?
Yeah. Well, we were in Newport.
That's pretty.
Down the Cape, though, they get these great whites because the seal population has got huge.
Okay.
So now off Chatham, they're good. The great whites are down there, man, eating all those seals.
Wow.
Yeah.
Wow. Now, what do you think? What do you think of some of those boats you saw?
We did, folks. We were down at the America's Cup, and it was like over the top. The Oracle boats.
Yeah.
We were right next to them. We were right next to them going.
Oh,
and
man,
it was insane.
That's great.
And you talk about athletes. Oh, my God. These guys are like the athletes of athletes. Because,
take a look at the money inside that.
Watch this. These boats, folks, they're called fixed wings. And I didn't even understand. I had been watching them for a year, but I didn't understand what a fixed wing meant.
Okay.
You used to sailing, and you put a sail up, right?
Yeah.
Well, the fixed wing, they're all composite materials. So check, this is amazing. It's just like an airplane. So this is what Larry Ellison did is this. They take an airplane, we get the wing here, and then you get the second wing that goes up and down.
For lift.
He took that fixed wing and made it it's a sail. They don't put the sail up. They have this big crane to put them in.
Yeah.
That is all metal. It's all composite material.
Oh, no kidding.
So they can take it, and if they make one mistake, the boats go over. I saw 2 of them go over. Just like that.
Yeah.
But they'll go from 0 to about 20 in 7 seconds. And they can stop just as quick because they just do something with it.
That's pretty.
So
you gotta love technology.
So these, big time. So these boats were 45s. The America's Cup in San Francisco is going to be 75s.
Yeah.
So it's going to be amazing, watching this. Now watch the money involved. If you think you're going to win the America's Cup, so there's 3 different parts, competitive deals. The countries that just want to be in the America's Cup, right?
Okay, yeah.
They figure that it costs about $40 to $60 million just to be in the Cup.
Okay.
If you want to be in the middle, it's $75 million. If you want to win it, you got to invest $100 million.
Oh, baby.
And you should see the Oracle boats where it's at. The Oracle boats, Larry Ellison, the Oracle boats is support boats.
Several.
It looks like the Green Berets are coming up on you, man. I'm not kidding. It's amazing. Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. I appreciate you growling and prowling out here with us. We have the Dow right now down 41, Nasdaq off 6, S&P's off 5.5. And don't forget, folks, today we got a full day for us, 9 in the morning all the way to 6 at night. And right now we got Ilka from Boston. Ilka, what's going on?
Hi, Tom.
How you doing?
I'm fine. How are you?
Good. Great to hear from you. How's your family doing? Good?
Everybody's doing fine. We went to Newport as well. We went the weekend pre-racing, actually, to see the boats. So they were unbelievable.
Oh, I wish you called me or emailed me. I would have come and picked you up. We were right off the castle, man. That's where my mooring was. Oh, that kills me.
Oh, that's too bad. That's bad. We were with one of my friends, actually. He's a musician, and he came from Poland, so we just went to see it. I mean, they were unbelievable. Those wings were just unbelievable.
Weren't they?
Oh, and I couldn't believe the way they were taking them out.
I know.
At first, I thought they were just taking the wing, but they're taking the whole boat out of it. Are you kidding? This is like a floating.
And what they had, folks, they had these big cranes. That's how they had to take them out. You take the boat out of the water and put it back in at the same time. We were right next to each other. That's too bad.
Oh, my goodness, yeah. Drinking beer, it was a beautiful weather. That was nice.
Wasn't it?
It was beautiful. Oh, it was beautiful.
No doubt.
But anyways, Facebook, I don't want to take your time because I know you guys are almost over. Hi, Steve, by the way. Hi, Steve. I'm very impressed with your whole radio, Tom, that you're doing. Everybody is just unbelievable.
Thanks, Ilka.
You have a great crowd. Yeah, a great group of people.
He's a good leader.
I'm a lucky guy.
Oh, well, he definitely is. Yeah, I've been listening to you guys for a very long time, so I definitely agree.
It's a beautiful thing. So we got Facebook. Facebook's at 3265. Now, do you own it? Are you looking to buy it? What are we doing?
No, I actually went in last week following Basil's. I had a very good entry.
Okay.
But just, do you think they actually will bring that up to the highs?
Well, it can go to the lows of the highs, which is 38.
Yeah.
You know, I mean, your first challenge is going to be that 33.45.
Yeah.
78 million.
Yeah.
I mean, if that's you know, if you get the test of that, and it never tests on, you know, something like we're talking about today, then you got to be, well, no, 7. No, it's still on. Well, that wouldn't. You don't want to test it today. You know,
no.
It's got to be able to hit that baby with some strength. And we have folks.
Yeah, it needs another day or two, I think.
Yeah, well, it'd be great if it went sideways for, you know, even a week or two.
Yeah, weeklies have been basing nicely, I think, and you know, So I just thought, at least if a couple of, I think it actually will, No,
I like the setup. You know, what you have, folks, is that when you have, you know, Facebook has that high volume. You know, I mean, it's the highest volume, so it doesn't have to go to the top, but the bottom of that top is game, which is 38 bucks.
I'll be happy.
And no one believes it, which is good.
Yeah, I know. The move today, it's a kind of actually, people are, I think, just not non-believers are actually looking at the little moves, and so
I would say that's strong for a bad market out here, and you get Facebook up 95 cents. That's big, man. Yeah, woman, sorry.
Woman, yes.
Yes.
Well, very good. Well, it's nice to hear you. I never have time to call because I'm working, but today our systems are down, so I said, I'll just make a phone call.
That's a beautiful thing. Well, listen, it's always a pleasure. Say hi to your husband first, all right?
I'll call or email so I can go on that boat with you guys.
I know! That would have been so cool.
That was so close. I know. Well, anyways, I'm glad that you guys enjoyed it as well.
Now, Ilka, your systems aren't down because of that virus or anything that's going on, is it?
No. Okay. I think they're just upgrading some stuff.
Okay, good.
Yeah.
They're upgrading the Tiger TV.
Yeah, exactly.
HD.
All right, you guys have a wonderful one.
Okay, have a great one. Have a safe one. Folks, you stay right there, because coming up next, we're going to Newton, Massachusetts, Basil Chapman, 11 to 12, then Tucson, Arizona, 12 to 1, Larry Pesavento. New show with Darryl Martin down in Dallas, Texas, 1 to 2. Back here with David White, 2 to 3. Out to California, Ken Shreve, 3 to 4, and then back here, 4 to 6. We'll be growling and prowling with you.
You got a permanent warm-up band now.
It's a beautiful thing.
That's great.
Wow! Have a great one. Have a safe one.
Take care, folks.
Great being back with you, man.
You betcha.